3, 2, 1.
Here we go!
Welcome into the open where we get technical. You should have investments in long-term growth. Good morning and happy Thursday. I'm Neal Hamilton. This is Get Technical. With me today is producer Aaron Bree, as always. Had a nice little conversation with Spencer about what a human machine, the human algorithm, Dennis Dick is. I don't think the 24-hour stream that some folks have been asking for will happen soon, but would be cool. Would be cool. You could watch him trade all day and then, watch him sleep, I guess. I don't know. He doesn't need to sleep. I don't even know if he sleeps, to be honest. Anyways, thanks for joining us. The agenda for the day. I'm on the hunt for high type flags, and I'm also very interested in GM right now because I think GM's an easy opportunity with good support. So I'm interested in that. I want to really quick, just as you guys right now, I just want you to know, if you drop in your ticker now and you give me the time frame, we can look at it, and we can do the whole thing. But first, I just want to show you how GM is starting to outperform the cars ETF, in which GM is actually the largest holding, but it's starting to emerge as an absolute leader. So we can see that yesterday, this is actually the weekly. So last week was an absolute watershed moment for GM starting to break through this head and shoulders reversal that GM has had against the cars ETF. So what we're looking at is what is the strength ratio of GM to other car companies, right? And the strength ratio was bad for a while. This is weeks at a time. The strength ratio was bad. Let me just really quick. There we go. Boom. But we are emerging. So all the chart patterns that you see on individual stocks, ETFs, any individual asset, it can be a future, it can be a Forex pairing, it can be a cryptocurrency. Patterns matter on anything, as long as it's priced over time. They also apply when you're doing these ratios that show relative strength. So this is GM/cars, CARZ, that I'm doing here to see how is GM comparing to other car companies, and right now it looks like it's about to have a breakout, baby. So we've got the neckline of our little head and shoulders here. This is my bull case for GM. So it's like something like these, with a full resolution coming from the absolute low here, which I'll use my line tool for, the absolute low to the neckline. We'll go ahead and add that. All right, so that's simply the resolution of this head and shoulders reversal pattern. This is a head and shoulders bottom. And if you guys don't know what that is, just ask me. We can go through it. I feel like a lot of the folks in here are just, we've had like the same crew of people, so they kind of already know what I'm talking about. But if we're growing and you're new here, I can talk about that kind of stuff. But this is the relative strength against the rest of the car companies that are in the cars ETF. GM looking good, looking for a steady breakout. So about from yesterday's, or what is that? That's got to be last week's candle. From the close of this, or the open of this candle, about an 8, almost 8.5, 8.2, whatever, percent change. Looking just at GM though. Looking just at GM, we have a firmly established bullish trend, upward trend. We have this nice impulse up, very nice impulse up. Good on you if you've been in GM. I have been sleeping on it, absolutely sleeping on it. It came out of this little ascending triangle reversal very nicely. establishing a new trend. So we went from sideways trend now to upward trend. Now we have an impulse up and a corrective phase. And let's just measure that corrective phase really quick. Pole. Flag. Pole added to the breakout of the flag. And you can see that that's exactly where it started consolidating. So now I'm going to expect the same thing. All right, so we've got same length pole, and we're establishing our next flag. Looks like a, looks to me like a descending triangle that's already broken out. So we're already broken out, and we're looking for a resolution of the pole plus our breakout point, which brings us up to a nice $68 price target. So that looks like if one were to enter into GM right now, you can reasonably expect growth up to 67.9 with another consolidation phase, which is another entry point or exit point, depending on what you want to do. Sam, keep it clean. Keep it clean. The question was bull flag. A bull flag looks like this. That's when it's rectangular. And then you can have descending flags, which would be a descending bull flag. But it's all I try to break these down into different patterns, and so people can really focus on them, because I think it's easy to understand, at least because it's easy for me to understand. I'm not a guru, guys. But at the end of the day, what I'm finding is all the patterns are the same. You just need to be able to recognize them. And then all of your entry, stop loss, and price targets are all the same, just based on a few principles that vary very slightly from pattern to pattern. How do I choose the price target, Jake Watson asks. So in this case, oh, you know what? Someone mentioned bull flag, and I completely ignored them, which was dumb. Because this is more of a bull flag. You can say it's either or. But this is kind of the point that I was making, that it's like, as long as you recognize that it's a period of consolidation and you have the trend behind you, you can set your price targets based on the trend leading up, or the impulse leading up to this little period of consolidation, and then adding it, in most cases, adding this pole or this impulse height to your breakout point. And I'll do exactly that. But to the person that said bull flag, totally right. I was like, nah. This is a what did I say, descending triangle? No, it's totally a flag, because it's rectangular. That's why I drew these horizontal lines initially. So this was the swing highs were hitting the same resistance line, and the swing lows were hitting the same support line. All right, so we were rectangular here. So that's why this was the breakout point, not this. I done goofed. But the way you do it, it's easy when there's a previous impulse, is you just go, when did this impulse break out? And say that's the start of my trend. And then you add that to the point of breakout. Right? And this one I got like a little bit aggressive on. I think you can go down even more. So I think I went down to the bottom of the wick. So we say this is the swing high. I went down to the bottom of the wick here, which is right about here. And then I added this. Added to this point. So I think deleting that, we get a little more bullish on GM. The price target is actually more like 74 if you see this as a flag, which I think you very reasonably can. And if one were to enter at the current price in the pre-market, we're at 59.5. It's a nice 24%. All right. I feel good about that. I think it's a great entry point for GM. Oh, Brandy's still on Mark Jakin. Yeah, I'm a lo-fi geek. Yeah, no, this is Lo-Fi Geek. Good call on the music. Vincent says GM will be a $100 stock in the next 2 to 3 years. I mean, it might be a $100 stock. Yeah, like within the next 2 to 3 years, it might be a $100 stock before that. If this trend continues, look at this. Let's look at the long term on GM. Look at how long this base is. This is like Tesla. Remember Tesla, that company? The base was like this, relatively flat, not really impressive moves. Let's look at the point of control here. We were just holding this point of control forever. This thing wants to pop. And EV, I think, is the catalyst. I think the EV story is that catalyst. I think honestly that the story of EV will show itself in the price action before actual EV like materializes. Danny, he would stab his ears all day and down stock all day. Okay, so guys, if you have a ticker you want me to look at, let me know what time frame. If you're thinking about day trading, or if it's so you guys say, like, tell me the day, show me the day chart, the week chart, month chart, 5-minute chart, 1-minute chart. Another thing that, well, we got the time here, just look at a macro perspective, and while you guys catch up with the delay on the video, I've got all of my sector ETFs here. I wonder if there's a way for me to make this. Oops, wrong window. All right, these are the ones that I'm really watching right now. So this is, I believe, tech. I believe this is consumer discretionary. This is energy. This is metals and mining. And I believe that this is consumer staples, XLP. These are the ones that I'm watching right now. So what we have seen very recently is a lot of folks getting out of tech, going into oil, getting into energy, which is at this point is oil. And that performing extremely well. Some of the early picks from the show, Oxy, all of those were benefiting from that. So the question now is, does the energy train continue, or are we starting to see the emergence of some things that might be related to reopening? So that's where I'm interested in consumer discretionary in particular, which the biggest holding there is Amazon. And then I'm also interested in comparing constantly XLE's performance against tech, to see if that rotation from tech into energy is staying, or if we're getting outflows back into tech because of what the Fed has done, and the story about vaccination. So this is, watching different sectors for strength against each other, or relative strength, and then picking good names within them. Okay, thanks, Isaac. So Isaac's got GRNQ for a day trade. Wait, a daily trade? You're getting fancy with me saying a daily trade. Does that mean you want the day chart? I'm assuming just a day trade. I got you. Always do the wrong one. So that is. How long is the delay? I'm curious, because we got a little surprise for you, and I want to make sure we time it exactly right. Yeah, of course, the reopening's coming, Jerry, for sure. It's just when, and how many speed bumps are going to turn off the sentiment in the market before we get there. RNQ. All right, this Isaac. We have a stock in peril, my friend. Look at the daily chart. Oh my goodness gracious! Call the ambulance. We have a stock in peril. Why do I get kind of quasi-sexual when I see this stock? Because I really like stocks that everyone else hates, that have formed long-term rounding bottoms, so that we can get in on big moves, because rounding bottoms rule. Wait, Green Pro Cap? Is this related to NFT creation or minting or whatever? No. What are you talking about, dude? Hi, Luke. Oh, by the way, guys, the Ponytail saga, I just want you to know, is not over. we will tomorrow for Friday Fun Day when we don't have a guest. Tomorrow we are ranking. I want to know from you, but I'm going to be the decider. I want to know from you, from S tier down to D tier, who has the best and the most compelling, I would say, an authoritative ponytail in the financial services industry, in the stock market, in Forex, in futures. I want to know from you, and we will rank them. All right? Because my goal is to get on that chart and knock all those motherfuckers out of the game. All right? So without further ado, I have a special little surprise for you. See if I can time this right. Oh, God. Oh, God. I'm nervous.
3, 2, 2, 1, 1, 0.
Pretty cool, huh? There you go, guys. That's our opening bell. Let us know what you think in the chat. Yeah, Jason, you already know I'm coming after that guy. Jason Douglas as Warrior Trader, Ginger Ponytail. Oh, I'm going after that. So let's look at GRNQ right now. We are into the open, so I want to see some performance on these ETFs just to see what they look like for the day on the 10-minute chart. But let's do this first, huh? GRNQ, a snack. Absolutely. Look at this beautiful rounding bottom after a period of just getting trashed. It's a very cheap stock, though. Very cheap stock. So we've got this volatility in here, and that's okay because the stock is such a low price. It'd be like that. All right, so let's do the damn thing. All right, so we've got our last swing up before the formation of our rounding bottom. Before the absolute, this is the swan song. The little before the stock started to really go down and consolidate at a lower price. So we'll draw the peak of our rounding bottom arc here. And then we'll bring it over here. And this is doing what every single rounding bottom wants to do. Is doing this. This is what these rounding bottoms be doing out here. Let's get the paintbrush. All right. So this is why I don't see this as a failed breakout, guys. See the spike above our resistance line? So this is what our rounding bottoms like to do. Down, 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 down. Swan song. Down, 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 down. Consolidate over a long period of time. The longer, the better. The bigger the base, the bigger the pop. Goes up to that breakout point. Consolidation. Pop. Back down, maybe below the consolidation. Comes back up. Consolidates again. Trying to test it. Breakout city. That's what we like to see. So here, let's put this to the task. Let's put this to task. So I'm going to draw my resistance line just based on the left pivot and the right pivot of our rounding bottom. And then I'm going to set my price target. We have this resistance level of $3. Nice and even, perfectly lined up. We're going to go to the absolute lowest point on our rounding bottom, which seems to be about like, Jesus. Okay, I got to zoom in on this. Which seems to be, how did you find the stock? Tell me. Which seems to be about 21 cents. All right. So I'm just going to draw this and I'm going to zoom out a little bit. Make sure I'm logarithmic too. So I can, oh, that's why it's not working. All right. So I just switched my chart to logarithmic. Don't freak out. It's just so we can see more of the chart at a time. All right. So I'm going to drag this. Whoops. Let me resize. There we go. So this line is the height or depth of our rounding bottom. Going to add that. See, don't freak out that it's changing size. That's because we're on a logarithmic chart. I'm going to add that to our level of resistance, which looks about right here. I'm going to switch back to regular because even I'm starting to freak out. All right. Price target 578, 570, something like that. So very, very attractive. Very, very attractive. Why? Whoa, let me change that. Why is that very attractive? Because this is still about to break out. So you can watch this for a healthy day candle close above resistance at $3 and enter for a profit target of 90%. Nice pick. Nice pick. Bring that one back up. If you're going to be, is it an NFT? Tell me how it's an NFT play. I don't understand. Engages in the provision of business solution services to small and medium-sized enterprises. Operates the service business. Oh, that just sounds like gobbledygook. That's just business. I don't understand. Viv has a really good question. All right, can you explain the difference between logarithmic and non-logarithmic charts? So the regular chart that you're looking at all the time is just regular, and all that has to do with is the scaling of your y-axis, which on a chart is going to be your price axis, right? You've got time on the x, and you've got price on the y-axis. And that's fine. In fact, it's easier to draw patterns in most cases on a regular old chart, and that's what probably 80 to 90% of people that are trading or investing are using. So this just shows the actual magnitude of price movements in equally distributed across the entire chart. Now, there are times when there's so much activity in a stock. If I were to do Tesla, for example, that when you're zooming in and you're trying to look at the price target, or not the price target, the price action in a small window of time, you're going to cut out all of the stuff that happened before. Now, in technical analysis, what happened before is very relevant to what's happening now. So we always want to at least have that in mind. So it's easier when you're looking at doing an overall assessment, a big picture of assessment of a stock, if you find a way to fit those previous vastly different, very far away prices into your screen at the same time. So what logarithmic is going to do is put emphasis on the most recent prices on your chart at what you're looking at, and then sort of de-emphasize what's happened in the past by condensing the scaling, right? Each tick here is much closer together, and then they get more spaced out. So I can see this within a magnitude that's closer to its actual reality of magnitude, and then this stuff is drawn in so I can actually pull it up on my chart. Does that make sense? MD, why isn't Robinhood completing my put calls on Tesla? You're asking the wrong guy. I know how it is. Oh, that was in Benzinga Pro. Isaac, if you could share. So Isaac says, what was the last one we just did? What was the ticker on that? That was sick. What screener settings did you use? And Kevin, I'm gonna pin that. Better to use log at fast time frames and non-log at longer time frames. Faux show. All right. Let's look at some day trade opportunities really quick. And guys, also be mindful that the ponytail wars are upon us. So if there are any ponytails that you know that need to be assessed, go ahead and drop those in chat. I'll add them to my list. So we're looking at the open. We're just going to look at our sector ETFs. I've got technology is about at this sort of resistance level. This is an important point. Consolidation. That's where we are today. Down open. We got, this is our consumer discretionary, which is heavily weighted with Amazon. Not doing anything interesting to me, although it's a nice healthy green candle on the 10-minute chart. Energy crossing down on the two exponential moving averages, 8 and 21, but it's holding at this point of consolidation, so we'll see what it does. Metals. This is I think metals is a black horse. I think I've been sleeping on metals, guys. I might trade this ETF a little bit depending on what it does. If we get some good movement here and break out above this this level that we're kind of stuck at, I mean, damn, look at this glorious thing. This is XME on the 10-minute chart. Very simple. I'm just going to do this really simply. Consolidation to the height of the candle, rounded bottom. right? Up to our resistance line. I'm drawing the height, which is the depth of that. And we can see that it broke out above that resistance and basically closed right at that price target. And then now we're consolidating here. This is looking like a nice little flag, this consolidation period. I'll go ahead and use the wicks. And I'm going to draw my pull from the base here. Big move. Bull flag. We can look at Ford too. Bull flag. And I like this bull flag. Oh, yeah, we're going to hit some control up here. So we'll hit resistance around 41. At any rate, this is XME metals. Good looking candles. If we get a breakout, could be strong. Could be strong. We're going to hit resistance. But if this trend, if we do establish a firm upward trend, we'd be looking for about $42 on this. So what I'm going to do is I'm going to set an alert for 41 and some change. Be warned. Whatever, dude. I don't know what that means, but I'm doing it anyway. I just want to get alerted if the price breaks out. If the price breaks out, I'm very interested. We won't look at MO. Altria Group. Ooh. Are you in this? Let's look at the daily. That's what you asked for, right? Ticker MO on the daily chart. Holy cannoli. Well, this thing rocks. What a beast. Good stock. What is the how 50? I like this stock. Added to watch list. Nice moves. So on the daily, you're just in a firm upward trend. Looks like a brief period of consolidation here. This thing rules. Whoops. What am I doing, guys? Good gravy. I'm so annoyed with myself right now. Oh my god. God, you guys ever do stuff with a computer while people are watching? Like if any of you guys work in an office or you have like a family, I don't know, any setting where you're like, yeah, let me show you how to do this on a computer, or like let me show you this presentation. And because people are watching you, you screw up the dumbest things. Like you forget how a mouse works. That's how I feel right now. At any rate, if this continues, which two things are missing from my situation here. My RSI and I don't even have volume. Why though? So here, let me do templates, get technical too. Let's see if that works. Okay, cool. I got my chart settings back where I want them. This thing's super oversold. I mean, it's simply oversold. So what I would be doing is watching for the pullback. Watch for the pullback because we're in oversold territory. Still, everything's very bullish. I mean, the trend is with the price movement on your RSI. We're just a little oversold, so you might get a little pullback. And I think that pullback would be within this range, right? So you got your support here at 48. That's my take on MO. But I'm going to keep it on my watch list. I really like how the stock is moving. Bigger time frame. Oh, wow. Stock's been around for a little while, huh? Week chart. Wow. Using the wrong one. Let me use this. I think you're breaking a 17, 18, 19, 20, like a 4-year trend, a 3.5-year trend. Wow. Really cool stock. I don't know anything about it. Altria. Is this like consumer non-durable? Oh, it's tobacco. Okay, yeah, I should know Altria. That's looking like a snack, my friend. That is looking like a snack. And you can see this reversal here, which is I know this is super small. Let me zoom in for you. So you're breaking this trend, right? We consolidated. We weren't really sure, and then we're out. We're out of it. We're reversed. We're in bull trend territory. And this whole thing, you could use as a flag. Like, this is insane. I expect great things from this stock. Great things. Let's switch to what am I on? Oh, I'm on regular. Good. So you could say the base is right about here. Let's just do that. You can say that this trend started about here, this bull trend. Although I keep selecting the wrong tool. It's ticking me off. So use that spike. All right, so what I'm trying to do is get a very long-term target that I think has to resolve itself, as long as the company doesn't do something really crazy and just disappear to the breakout point. Oh no, it's the height of the pole. The height of the pole, which is this swing high here, added to our breakout point, which is right here. So my long-term price target for MO is 91.50, which from today, 80%. Sweet stock. Oh, wow. Yeah, I kind of want to... Okay. Ex-dividend date on MO is the 24th. I think I'm going to buy some. Okay, you want to look at Palantir? Palantir, you got to give me a time frame, bro. Need a time frame. Jonathan Tapia. AAL. Ooh. Okay. This one is it's doing that thing. So this is a very important line for American Airlines, 2489. See what volume profile has to say. Yeah, I mean, of course, during this period of consolidation, there's so much fighting. So you're obviously going to have very strong support here this previous period of consolidation. Thanks, volume profile. Let's get rid of that. So I've drawn this line here. It's 9:47. Today we have JC Parets from All Star Charts. So stick around. He's the king of charts, the king of technical analysis. So make sure you stick around. With American Airlines, let's kind of look and see if there's a discernible reversal pattern. One is you just need to break above this resistance and hold it. Your very important number is just 2486. And you have a double bottom. Double bottoms rule. The producer AP's dancing in the background. Hey, Brandy. Yeah, double bottom, guys. All right, this is how we do it. Let's get to the daily. Whoa. Hold on, one more time. All right. So American Airlines, ladies and gents, this is a reopening play, obviously, but boy, has it been tossed in the dirt with a very classic downward, ziggy-zaggy downward trend, and now we are right where we want to be in double bottom zone. We saw this double bottom walking across the room and we want to have a conversation with it. So what are we going to do? We're going to use our rectangle tool to draw our support and resistance lines to box in this bottom where the meat of the trade is. Not where this little frothy tease me kind of thing is. It's right about here. It's where you see actual consolidation. So let's do that. Interestingly enough, actually, it looks like it could be a little bit higher. So we're going to go up to this wick. Why am I bringing it up to this wick? Because I noticed that on the right side, on the far right pivot of my rounded bottom, that we hit resistance here. That means that this was the meaningful level. And then if I zoom in more, that this wick here on March 17th was also meaningful. So this is what has shown up again and again as the meaningful price level. All right. And then let's adjust this rectangle down a little bit to 825 is our absolute low for American Airlines. All right. And the price level to break out of that has been broken out of is 1865. Now let's look at the measurement for this pattern and what it needs to do to resolve, which it may have already done. It's kind of looking like. So we take the depth of our base of our double bottom, and then we add it to our resistance, which brings us up to about 28, about 29 actually. But I would be conservative and say 28. All right, so that's a 28% or $28 price target. From where we are at this point in time with American Airlines, that's going to be a 16.5% move. Very nice, not bad, but I think there's still gas in the tank because this is right at this resistance level. What I would look for is a period of consolidation. This is what I hope for with this stock. From a technical perspective, this is in the realm of hope. This is not in the realm of what I predict, right? Is we get to this level and then we do a little of this, right? So that the buyers and sellers can cool off. We're not in overbought territory. We consolidate at this price level. And then I want to see a full break from this full bottom. Just something like this, right? So I want my my move to kind of be like this. And I want to see a close above that line. Close above that line would set a very aggressive price target. $53. That's kind of price target number one, target number two. Target one, what was that? 29. What was that? Like a lot on the line here though. Reopening play. Ross Martin says, Neal, to what extent does technical analysis matter? Don't stocks just follow futures on bad days? All of the things that stocks do show up on the chart. And we use the chart to make our best estimate of what is going to happen next. That's the fulcrum on which I don't even know if fulcrum is the right word, but that's like the main thing of technical analysis, man, is everything that's happening fundamentally. Let's look at XME happening fundamentally. Everything that's happening on a macro level, economic trends, all of those things are reflected in the behavior of all market participants, whether they're human or not. And that's what shows up in the price chart. The price chart is the manifestation of the behavior and sentiments of all market participants. And that's why we use just the chart. Because everything's baked in there. So I want to go to my ETFs. I want to go to, oh no, that's not the cool one. I want my sector ETFs. I want XME. Let's take a little look here. $10-minute chart, XME, metals ETF, Spider metals and mining. We are broken above. I like the stock. I like it. I'm going to go long on XME. Which is, it's not totally oversold yet here. And the trend is agreeing with us. MACD is agreeing with us. One is I just want to buy some shares, man. I want to own XME. I'm just going to buy 50 shares of XME. It's just 2K. I've been sitting on a lot of cash, so that's not like a crazy aggressive, thing. I'm just not holding a lot of stocks, and I like the strength, the relative strength that XME is showing. And I'm also going to check out the options. In the money call options expiring Friday for XME are about $68 right now. They're up 20% on the day. I'll just buy one. I'm not trying to be crazy. Putting $69 on the line. Would hope for returns like 20, 40%. TKAT. Well, we got 5 minutes left, guys. NFT. Oh, John Sylvie asking the question of the moment of the times. What does NFT mean? Non-fungible token. To be fungible means that it may be truly replicated. Maybe truly replicated. So when you think about a digital thing, like a picture of something, you can copy and paste it, and it's been truly replicated down to its code. It's the same exact thing. Non-fungibility is possible with blockchain technology, where you place a stake in the blockchain, in this case Ethereum, to say this stake or this token, and I know I'm mincing words, I'm sure a bunch of crypto geeks are going to crucify me, but this is the only true version of this that exists. You may find something that looks like it, that behaves like it, feels a lot like it, but it's not it, because it has been staked in the blockchain. Yeah, Chris, thank you, Chris. You guys can't obviously click that URL, but look in the chat for the link that Chris just provided. That's going to give a much better explanation of what an NFT is. Very interesting. I've actually been into NFT art for a few years, having no idea exactly how it worked. I just like the way the art looked. I just thought it was interesting. At any rate, XME doing his thing. Come on. Let's go. Why? This is why option orders don't get filled, is because there's too much volatility, and the price that you wanted to get your option at no longer exists. And then what happens is, if you don't cancel your order when the price starts coming back down and the stock starts going into a free fall, then you get screwed holding the bag. So we don't want that. Yeah, so I just got some common stocks on XME. Whatever. I'm here for you guys, not for myself. Okay, PLTR, what time frame? NNDM, what time frame? We got 3 minutes until we get JC. He's not here yet, though, so we might have a little more time. Okay, so we got X on daily or weekly swing. Thank you. X, you steal. Cup with handle, right? So this is a cup and handle because it's not following a downtrend, although this is round and round, round and round. All right, tell me, look at the lyrics for Round and Round by Rat with 2 T's and tell me that song is not about technical analysis. Fight me. I will take that to the grave. So big picture, small picture. The big picture is this isn't just absolute textbook gorgeous, most attractive rounding bottom on steel with resistance at about 23, 24. We're going to do the depth of the base from the resistance. So we go right about here. We come down to the absolute lowest point on X. I want to compare X to XME after this just to see if it's standing out. So we're at a resistance level. price target of just the rounding bottom is 43. I'm going to clip it and ship it. Boom. And we still have room to enter because what have we done? We've done that thing that we get with these rounding bottoms where we form our right side, our right side of the bottom pivot, our right pivot. And then we come back up, we hit that resistance, a little bit of consolidation. But what's the cool thing about this consolidation is that it's actually a continuation pattern. What kind of continuation pattern is it? It's a cup and handle, right? Is this a Cobra Kai song? No, I don't know. Maybe is Rat on like the Karate Kid or something? That wouldn't totally surprise me. All right. So now we've got a cup and handle continuation pattern that is telling us that this upward trend will probably continue and break through. Probably do it. There's a greater than 50% chance that it will. And also the overall sector has strength. That's why we like this stonk even more. All right. So we're bringing this U down to the absolute low. And then I'm just going to, this is the way I do cup and handles. I've been trying to do them with like the arc like everyone else does. I don't like that. All right, we're in breakout territory for our cup and handle, right? It's doing what we want it to do. Cup and handle, the handle has to go down for a period, and it's done that over 3 days. And then we broke above the sloping downward resistance level on our handle here. Now what we want to see is just a solid close above where this pivot is. This pivot is right at 24.22. That's where we're going to draw our line in the sand. Very meaningful level here. Let me do this to just show how this level is harmonic, or it resonates through the past. I'm totally making that up. I'm ripping off like Elliott wave stuff. If you know, you know. But see how this resonates in the past? This was the resistance level when we had this last swing high or little swan song. It looks like it served as somewhat of a consolidation period here. So when we had an impulse up in the past, we had consolidation down to right about this level. It's right about where the consolidation or resistance lines are. Let me turn off these moving averages to make this much more clear. Or in the past, so like this price level is here based on what has happened in the past. What has happened before will happen again in a different form. All right, so we've got our nice cup and handle. We are watching for, which just gives us more confidence that this rounding bottom is going to break out and resolve. So we are watching, of course, for a break above $24.50, $24.50, which will give us at that break. I'm going to go just a little bit above it. I'm going to say $24.81. Give us a price move of about 76.5%. So really, really nice. Really, really nice on X. This one's getting added. Good picks from chat today. Good picks. You guys, I'm literally gonna make an LLC and call it the Get Technical Brain Trust, and I'm gonna hire all of you. And we're just gonna listen to 80s hair metal and pick stocks and talk about rounding bottoms all day. All right, good stuff. I've got that on. And just really quick, let's just look at how that compares. Currently, some nice relative strength, but not as compelling as I would have hoped. But still, it's highly performant. Highly performant. All right. That's enough out of me. Our guest has arrived. The venerable JC Parets is in the house. So everyone, you guys, yeah, if you guys join the Brain Trust, you do have to grow ponytails. I hope that's not a problem for you guys. All right. The venerable JC Parets of All Star Charts is with us today. Producer AB, could you bring JC in? What's up?
What's up, Neal?
How we doing?
Never been better, man. Things are good. Market's ripping. Bull market, baby.
Love it. Love it. What are the I guess what. So you were calling rotation into value. You were kind of very clear, even though people were denying the reality of what was. And you're like, all right, well, here's a chart. And this is what the chart says. Rotation into value. Really quick, I just want to go over, how do I, as a normal person with a normal charting tool, what's a good way for me to just see that in action? How do I see the rotation into value in action?
Yeah, listen, I think it really comes down to understanding what you're looking at and what you're talking about. People talk like, oh, what did the Dow do today? What did the NASDAQ do today? You know, what did the market do today? I think where a lot of people fail is they don't understand what's in these indexes. You know, there's this misconception that the NASDAQ 100 is the market, right? And it's the furthest thing from it, right? The NASDAQ 100 has zero exposure to financials. It has a 0% weighting in energy. It has 0% weighting in materials, 0% in real estate, 2% in industrials, right? So like there's almost nothing in the stock market in there. What you have are 45% technology, a bunch of Amazon, and communications. It's like 85% of that index. So what you're looking at in the NASDAQ 100 is you're really looking at a growth index. So it's important to understand what's there. It's also important to understand what types of industry groups run the world, right? Europe has twice the exposure in industrials that the S&P 500 does, for example. It has more financials. Some of these European countries like Spain have twice the exposure to financials. You know, a lot of these countries in Latin America and South America, they have more exposure to natural resources like Peru and Chile. Chile is huge on copper, for example. So it's understanding what's driving all of these markets. Why has the US been the best place to be in the world for such a long time? Because they got a ton of growth. And, you know, right? And the NASDAQ has been so great because it has no banks and no energy. And those have been the worst places in the world. So how does an investor that doesn't rip through 5,000 charts a week like we do recognize this? I think number one is understanding what's driving these markets, what's inside of them. And then it becomes quite obvious when you're seeing, you know, on a day like today, financials are up 1.5%. The NASDAQ's down almost 2%. It's quite obvious the bifurcation that's been taking place. And again, it's not anything new. This has been going on since Labor Day of last year, right? So this has been happening for a long time. I think the only people who have missed it have purposely been ignoring it. I mean, it's been quite obvious. Like, I mean, and it's, again, it's not like I called it like, oh, this is what's going to happen. You know, we were looking at it in real time. It was more like, hey, this is what is happening.
Yep.
Right? It wasn't like this grandiose call. I mean, it's right in front of you. It's quite obvious.
Yeah, and that's another thing that I really like, JC, is that you're kind of removing this mysticism that people project, like frankly onto you and onto others, like looking at the charts like it's this voodoo woo woo. You know, you're using charts to like predict the future in it, or like the tea leaves thing and all that kind of thing. But no, the price is what is happening with these companies. Is what investors are doing,
right?
And this is simply what's happening. I'm not trying to project anything. I'm not trying. This is not a magician show. So I have seen that. I've seen you. I saw. I think you're on like Investor Business Daily. You've been getting interviewed, and just saying like this is just what's happening, and people are always kind of like surprised. Yeah,
and what are we doing? We're just recognizing trends, right? In this case, we're talking about the tremendous outperformance of value over growth. I mean, it's just a very obvious trend. That's one trend, but we're trying to do, I could talk to you all day about all sorts of trends going on around the world. And the reason we look at charts, not because of voodoo or tea leaves, the reason we look at charts is it just so happens that the best way to visualize the changes in equilibrium between supply and demand just happens to be in chart form, right? You don't need charts. You could look at them on Excel spreadsheets. Like there's all different ways to do it. It just makes your life the easiest by looking at charts. And I'm a big fan of making my life easier. You know, no doubt about it.
Yeah. I think that's a very good quote, actually. Is a visualization of supply and demand.
And you know, the pushback I get is like, oh, JC thinks he's so smart. He thinks he's smarter than Cathie Wood because he's buying value and selling growth stocks. So JC thinks he's the smartest guy in the world and he thinks he's smarter than Cathie Wood. Like, I really get that sort of feedback. And like, first of all, I don't know anything about Cathie Wood. Like, you know, she's like a superstar now. Good for her. You know, she has all these ETFs and like $1 zillion under management. Great. Yep. That's fantastic. What the hell does that have to do with me recognizing that money's flowing into value at a greater pace and it's flowing into growth? Like, I don't think I'm anything. I don't think I'm smarter than Kathy Wood. I don't know. I know very little about the woman.
Yeah.
I have respect for her, if anything, right? In fact, I could probably guarantee you that she's smarter than I am.
Yeah, same here.
Let's be serious.
Yeah. Absolutely. But I think the main thing here, and this is just, I mean, this is JC and I having an absolute, like, we're having a kind of a circle jerk about how technical analysis works, but the thorough thread here is that it's objective. It's completely objective. We're not trying to project ourselves onto what's happening. We're not trying to project our love or disdain for any asset or organization or any currency or anything like that. We're simply looking at what is happening and then reacting to that.
Because I don't care.
Right, like exactly.
The S&P 500 could double or it can get cut in half. Gold can go to 10,000 or it can go to 0. I don't care. I don't care. It doesn't matter either way. I'm good either way. I got my family. I got some good wine, some steaks. I'm good either way. Yeah,
but then so that's good that you got all that stuff. But then as an investor, I don't care what any one of them is doing because I'm just going to the one that is performant if I want to grow my wealth. Right? Like there's always going to be some form of opportunity, even if you're going short on something.
Right.
Even if there's something is very obviously in a free fall for a reason that you understand, then you can go short on it. If something is about to perform that has been historically thrown in the garbage, or at least in recent memory, because everyone's very, very focused on like now, then switch over to that. And that's something that I did based on a lot of cues that you had was I switched over to some oil. Actually, I did it like without even realizing what was happening. I was like, damn, like XOM is looking like it's doing a thing. And then I started to understand the big picture, and I've been a lot more interested in looking at relative strength among asset classes and
relative
sectors.
Weakness, for example, the opposite of relative strength, which what we see in the growth stocks and technology and consumer discretionaries. Communication has been the one area there that continues to show some relative strength, particularly versus some of those others in the group. And then also the intermarket implications of a rising rate environment, right? Interest rates have been going up as this rotation into value has been taking place, which is perfectly normal. So if you're stuck in these growth stocks and you're stuck in these mega cap, it's because you've purposely ignored what's going on in rates. You've purposely ignored the rotation into value. Like you just close your eyes like it's not happening, which I think is great because I think it's going to be really hard for a lot of investors to convince themselves that, you know, their portfolio shouldn't be in these companies that are revolutionizing the way we live. Those are some of the worst places to be. And in fact, and clean energy and all these things that they've been told are great things. It's actually the opposite. We want to be in the grossest, most terrible, most polluting types of companies, the ones that affect climate change and hurt the world the most. Those are the ones that have been doing well, that we've been buying, that we want to continue to buy. And all those banks that you thought you hated so much, those are great too. And JP Morgan, as we speak, breaking out to new all-time highs.
Oh, really?
You know, the banks people think that they should be hating, and the companies that are polluting the world that they haven't been buying, which is great, right? Because those have been terrible companies to buy. You've wanted to be in the growth and technology, but that was a different cycle. That was a different market environment. It's not the one we've been in. And if you're ignoring this, it's like, what are you doing?
So yeah, here's what I have to say about that. So like we have an emotional connection to assets for whatever reason. Like I had an emotional connection to Kathy Wood ETFs because I just set it and forget it, and they were making me money. That's great. But also I liked the story behind it, right? Like I like the disruptive innovation. I like the next phase of the internet. I like the AI stuff. That's something that I'm a sci-fi nerd, right? Like it's easy for me to imagine that these are going to be firmly established norms 5, 10, 20 years down the line, and be great organizations that are based on this technology. Totally makes sense. But the thing is, that's just one piece in a massive system. All right. The system is what matters. All right. So we can't fall in love with any one piece because it's all kind of moving around in a stew. So even though oil is ugly, yes, most of the oil use is for combustion engines, and it's putting carbon into the atmosphere. It's just a part of the same system as that stuff that you love. So if you're going to take part in the markets, you've got to love all of it. Right? You can't just love it. There's no buying or selling with one class unless it's going on with another one. So JC, if there's any lesson for folks that are trying to get ahead of this type of thing. Say I want to be able, and I'm going to narrow this. I know you're going to hate me for this, but I'm going to narrow this to just the stock market. And so let's say I want to always be in a sector or industry that shows strength. Are there any tips that you can give to that person?
Well, new highs are not a characteristic of a downtrend, right? So when you're seeing new highs, that's evidence, right? I'd say even if you're just trading in the stock market, to ignore the other asset classes is irresponsible, right? Like you're missing the bigger picture, and you don't have to trade bonds. You don't have to trade currencies, commodities. You can ignore all that stuff if you want, but there's information in those trends. And at the end of the day, there aren't that many commodities. So like to follow what's going on in the commodity space is really not that hard. Same thing with bonds, right? What do you need to look at? High yields, treasuries, corporates, like it's not that many. Look at those rates. I mean, how many you got? You got your 5-year yield, your 10-year yield, your 20-30, maybe your 1 or 3 or something like that, right? There's not a lot of bonds. So with very little work, you can get a lot of insight into the intermarket complex, which helped most certainly identify the fact that we've wanted to be getting out of growth for a while, heavily into value. And then it makes sense, right? Because you're seeing interest rates breaking out, right? And bonds rolling over, which is characteristic of an environment that value tends to outperform. Then you're looking at all these natural resources and commodities breaking out to new highs. Again, characteristic of an environment where value is outperforming because all these are value names. Then you look at financials, and then you look at some of the countries with exposure to financials like Europe, and then the US financials index breaking out of a 14-year base. So now you're incorporating interest rates going up, which is good for financials. And you're seeing that not just in the United States, but globally, right? And then the countries where they're taking these natural resources out of the ground, the companies building the machines to take these natural resources out of the ground, and the banks financing the whole thing, all of that is value, 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 value. I mean, so these other asset classes, and then look at the bond market getting absolutely slaughtered, right? Again, classic environment for a rotation into value. And we've been comparing it to 04, 05, 06, where the stock market did well, technology went up. It's just that technology went up the least of all of the other ones. Financials are where you needed to be. Energy was where you needed to be. And I just don't think investors, the NASDAQ 100 has zero exposure to energy. The S&P 500 has 2% exposure to energy. Small caps and mid caps have 1-2% exposure to energy. So think about an environment where crude oil is at $200 a barrel. How's your portfolio looking? Is that great for the economy? I don't know. Probably not. Is that great for earthlings and citizens of this globe? Probably not. But I have no say in the matter. So right. We can either take advantage of it and make money for ourselves and our families, or we can complain the whole time. It's up to you. I'd rather not complain because nobody cares about JC's complaints. My wife certainly does not. And that's really the only person I care about. And my daughter's too young to care. So, for me, I'd rather just profit from the whole situation and, worry about the consequences later. I am confident that I can withstand the consequences of higher oil prices if I have more money in my pocket than if I have less. So if I spent all that time complaining instead of making money off the whole thing, I would be at a disadvantage if and when oil gets to 200. I prefer to be at an advantage.
Yep. All right. So that's just a dose of reality, right? We're just focusing on what is happening versus what we want to happen.
I don't get a say in the matter, right? Gold going to 0 or 10,000, I get no vote in the matter, right? I can only take advantage of the direction if and when they move, right? I get no say in the matter. Nobody, right? I can tell you what I think should happen. The market certainly doesn't care what JC thinks should happen.
Right. And history would show that they never really have. So,
right.
JC, where can folks find more from you? Because I think that people really like this way that you, frankly, when I hear you talk about the markets, you make everything seem matter of fact and simple. When I hear other people talking about technicals, they always make it seem inaccessible, which I hate so much. And I really want to destroy that. And I think that you are in many ways one antidote to that problem. Where can folks find more from you so they can look at technical analysis with clear eyes and without all the BS?
Listen, I'm easy to find. You can normally find me on Sunday afternoons at Jason Raznick's house, right? Just sipping tequila with Raznick. Go to allstarcharts.com. You can find me at All Star Charts on Twitter, Instagram, Stock Twits. We're on Clubhouse every day at 11:30 a.m. Eastern time. YouTube at All Star Charts. Say what's
How do you
up.
get it? How do you get into Clubhouse? You send me an invite to get in there? How do I do it?
I honestly, this is above my pay grade. I know.
Yeah,
I
I
press
don't
a
know.
button. I press a button and just start talking shit. That's it.
Okay. Hey, that's
I don't
what
really
do
know
every
how it
morning.
works.
All right,
People
guys.
show up and ask me questions. It's great. I don't know how it all works.
Well, I hope to join one of those sessions. JC, man, you've been great. I really appreciate you coming on this morning.
You got it, dude. Thanks for having me.
All right, have a good one, bro. That's JC Parets. He is the founder of All Star Charts, allstarcharts.com. Definitely check out the website and follow him on Twitter. It's the same handle. It's at All Star Charts. We dropped it in there. Yeah, sorry. Snapcrackle says he'll invite me to Clubhouse. Dude, Twitter already started a Clubhouse thing that's like exactly the same. And I like it better, right? Because I don't have to start a new platform or anything. I think they've already gotten ripped off. No, JC, I don't know if he's done anything with Raging Bull, to be honest. I don't think he has, though. I do not think so. I think JC's always had his own organization. He might partner with other people so he can get his charts out there. But what he does is he and now like a pretty large team of people are just always looking at charts across all of the financial markets, sort of like he talked about. And then they find correlations or they find between markets and asset classes, whatever, and find patterns, meaningful price levels, etc. And then they provide those charts to institutions. Like institutions ask him for his technical analysis research. So anyways, right, I just want to remind everyone, if you're on YouTube, and I think on some of the other platforms, we have 4 platforms that are watching right now, but go down to the description. You should see a link to our Discord if you want to join the Benzinga Discord. Can I compare SPY with yesterday? They look the same. So Daniel says, let's look at SPY. Let's do it. Got about 9 minutes left. I'm hungry, dude. I think I'm gonna have a bowl of Cocoa Pebbles after this. Okay, so you want to zoom in. So this is what we would call an inside day. An inside day. Why is it an inside day? The candle for the day is within the bounds of the previous candle. Right? And what do you need to make money in any market? You need prices to change. You need volatility. So we're pretty much inside where we were yesterday. Not really sure. Here, let's look at a shorter time frame. What I would say to this, though, is that it's good that it's not going lower. All right, that's bullish. That's bullish SPY. But we are confirmed no longer in a correction. We were in a correction with SPY. We are in a correction with QQQ, I'm pretty sure. With NASDAQ, I believe, is still in the corrective phase. SPY is out of it, and we're holding. Yeah, Cocoa Pebbles, what's up, big? Problem? I don't know, it's something about Cocoa Pebbles. I think it's the mouthfeel. They rock. They rock. 5-minute chart Daniel wants. SPY. Where do I have going here? Is this, it's the 50-day. Just throwing VWAP. Let's get crazy. We're just doing some serious consolidation here. Let's see what the EMAs say. Yeah, this is serious consolidation. Yep, so you just want a nice break above this level for you to be confident in any sort of upward movement, upward price action. See where it shows up in the past. It was support in the past. The body of a candle was stopped there. Let's go back. It was the beginning of a gap. Partial support. So it's a meaningful level that we just got to get through with SPY here. we're looking at the 5 minute. I'll switch to the 10. It's where I'm more comfortable right now. Let's look at RSI. Let's look at everything else. It was oversold for a period on the 10 minutes. So that was during the pre-market. We have an upward trend on RSI. We're in bearish territory with MACD, but the fast line just crossed above the slow line, and we're heading up. We are heading in the right direction. So yeah, I just think a break above 395 and a half is going to be a bullish indication. Hunter asks, yo, Neal, what do you think about the market after listening to Powell yesterday? I didn't listen to Powell. I just traded options while it was happening. Which is not, I'm not trying to be cocky. I honestly, I don't understand enough about market dynamics for him to say anything that really matters to me. I just know stimulus checks and interest rates. Oh, he's speaking today. Yeah, guys, I gotta be honest. I'm too dumb. Sorry. Just looking at the charts. Man, Steele, what a beast. What a beast. Good pick. Anyone else have any good picks? We've only got 5 minutes left, so you guys run the show. You guys are running the show. I want to remind you guys, so just a couple of things. One is, I would really appreciate it. It's very helpful if you guys, if you haven't already, just hit that like button. Super helpful for us to keep doing this. Number 2, check out our Discord if you haven't. We want to get some activity in there. We think it's a good way to continue the great conversations that we have during the show. Neal just said the magic words. Great, strong name. It's spelled wrong, but strong, handsome name. It's incredible. I feel like I've heard it somewhere in the distant past. I have a feeling of nostalgia, warmth, and courage when I hear the name Neal. I don't know what it is. So looking at NMM, messiest chart on the show because this is I'm heavy into NMM right now. So NMM was a previous high tight flag. For those that don't know, it broke out. We've earned so far on NMM, which I'm full disclosure, I am still in. We've earned so far about 45% on it. It is beautiful. We love it. I got like kind of quasi leaps options contracts on it, but mostly I just got common stock. Price target 1 has been BTFO'd, but we're oversold. So what I've been doing is just raising my stop very tight every single time. I'm keeping all of this profit, and I'm going for price target number 2, ladies and gentlemen. That is for sure. NMM shipping stock, believe based in Greece. What we had was a double bottom that formed a nice high tight flag here. And boy, what a ride has it been. What did I do wrong? Daniel, I don't know what I did wrong. What are you talking about? What was my worst trade ever? God, I feel like it was probably like in the past. What was my worst trade ever? My worst trade ever is probably a mistake, where it was probably options where I meant to buy like a put and I accidentally bought a call while something was in a free fall. And someone was like, yeah, sure, I'll sell that to you. And I immediately lost like, I don't know the details of my exact worst trade, but I have definitely lost $1,000 on a single trade. That's probably the most I've ever lost on a single trade. And that's all of my money. That's like all the money that was in the trade. That's the whole thing to zero. All right, so Jason's pick, VISL. We'll look at VISL. That will be the end. Make sure you check out the Discord. Make sure you guys check out Benzinga Pro if you haven't. You're about to find out exactly why you should. Okay. So VISL we looked at, and I did all my stupid drawings on it. Let me delete that. I mean, the man's got good taste. Don't tell him I said that. Don't tell him I said that. It's a rounded bottom that keeps getting a little effed by my rectangle here. So let me bring that up. There we go. Don't tell Jason I said that. And it's doing the thing, man. We get rejected, and then we get a little action here. Let me move these moving averages out of the way. We're on the daily chart. I still want to see a break above $5.08, 504, something like that, above the meat of the move, and then we're flying. We're flying, guys. Turn on volume profile here. We can see that. Whoa, I don't know why my volume profile looks like that. We can see that we're just above this value area, which means that there are not many hands above us. So this is like free sailing once we break out above this level. The RSI is diverging, though. I will say that. So we've got a downward trend on RSI. Where's my freaking volume? Volume is diminishing. MACD is diverging. But we are in a consolidation phase. So things got to get sorted out for there to be like an actual uptrend on this. But just really what I'm trying to illustrate is that your RSI chart, your MACD chart, they should be kind of doing the same thing that your stock is doing. So, I mean, actually, it's not terribly off. So I kind of take that divergence thing back because we can see it reflected down here, this little upswing. So at any rate, I want it for Jason's pick to really mean anything to me. I want to see a break above 506. That's the show for the day. For the day, folks. This has been Get Technical. I'm Neal Hamilton. With me, as always, is producer Aaron Bree. Get the name right. Keep that name out your mouth if you're going to say Aaron Bry. Thank you so much for joining us and for those picks. I'm going to make money with your picks. Guys, remember, the Get Technical Brain Trust. We are forming it. Applications are open. Qualifications must be willing to grow ponytail. You don't have to have a ponytail yet, but must be willing. All right. And if you have one in the past, I'm going to need to see a portfolio. I'm going to need to see some pictures. All people of all stripes are welcome beyond that. Tomorrow is Friday Fun Day. We won't have a guest. We'll be hanging out, doing some goofy, silly goose fun time stuff. Among those we're going to be ranking profiles throughout the stock market and financial services industry. You know who's going to be there. You already know what ponytails are going to be there, with the goal of taking their asses down. All right? I will not stand while I can't live in a world where I don't have the most badass ponytail in the stock market. All right, ladies and gentlemen. So I need your help. We'll have more picks tomorrow. Of course, it's Friday, so options will be expiring. So we might get some really YOLO trades there. But again, right now, it's all about protecting capital. Markets are a little bit weird right now. We're not in just crazy everything goes up mode that we were in 2020. So just remember, protect your capital. That's what I'm trying to do. Thanks so much for joining us. That was JC Parets earlier. What a guy. Fun guy. Follow him at All-Star Charts. Up next, we've got our Benzinga Pro Showcase with the one and only birthday boy, Ryan Faluna. Everyone say happy birthday to Ryan Faluna. Definitely. And the venerable, the powerful, the name that must go without speaking. I'm trying to do a Voldemort thing, but it's Jonathan Mallard. Jonathan Mallard will be there. So show him some love, guys. Thanks so much. This has been Get Technical. Happy trading.